Hello and welcome to the very first episode of Investing $10,000, the weekly series where I invest $10K into stocks, real estate, or really whatever I see fit and share it with you guys here on the channel. The goal is to grow the account as quickly as possible while maintaining a low to medium risk profile. So basically the same as I do with all my other personal investments. So with all that out of the way, let's get into our very first segment, weekly moves. So here's where the account is at the time of filming this right now. So obviously with this being the very first episode of the series, I had to choose a brokerage and I went with Robinhood. So I went ahead and opened up a Robinhood account and funded the account with $10,000 and got myself $5.27 of some free Tesla stock. Already winning, baby. And of course, just like many other brokerages, the full $10,000 was not available right away, but they did give me $1,000 of buying power to get started with. So with that, I was able to get started on a couple of moves. So of course, very first thing I did once I had my $1,000 of buying power ready to go was set up some recurring investments, because after all, with Robinhood, it's really awesome. You can set up even just $1, $2, $3, $4, $5 a day that you want to invest into some of your favorite stocks or cryptos. And so of course, I went ahead and took the time to do that. So as far as the recurring investments that I set up right away, I set up AMD to buy $2 every market day, Google to buy $1.50 every market day, Nvidia to buy $2 every market day, and Tesla, I'm going to buy $5 at least every single market day. And on top of this, for crypto, to speculate a little bit, I have it set up to buy $1 of Bitcoin every day. And since it's all the time, and not only when the stock market is open, but I even get to buy some crypto on the Saturdays and Sundays, I figure $1 was enough to kind of compensate for the difference between $1 and $1.50. So on top of recurring investments, I also plan to make some trades throughout the week whenever I do see that there's an opportunity, whether that's a super bad red day or maybe one of our stocks is just getting hammered that day for some reason. When I see an opportunity, I'm going to be making a trade on it to help get that $10,000 deployed. So with that being the case, let's go through the history and take a look at what we wound up doing this week. So as we can see here on the 28th, I made a couple of purchases. I bought Google, AMD, and Tesla, bought $100 of Tesla, $30 of AMD, and $10 of Google. And then as we went throughout the week, it come to the 30th, I saw some more buying opportunities to where I bought Tesla, some more AMD, and some more Google. And then moving into Friday, July 1st, I bought another $69 of Tesla and a new position that I opened on Friday, TQQQ, I bought $100 worth of it. So buying the TQQQ in this market to me is a great way to get some leverage in your portfolio while avoiding call options. Because quite frankly, any options to speak up in a bear market are extremely risky, especially when you start to think about that all of those basically have an expiration date, right? Whereas with shares, with TQQQ or other leveraged funds, you don't have that expiration date. So in other words, you don't have to be worried that your option is going to be going to zero. With these TQQQ shares, even if we have to hold out their shares, they never expire, but we still have that nice leverage if the market does start to come up. And truthfully, the lower and lower this market goes, the more and more I'm going to start adding to this TQQQ position. So that way, when we do see the rebound, which I'm sure we will eventually, then we're going to be loaded up and we're going to be able to make the best of it in a diversified way. So now that we've talked about the portfolio activity this week, let's jump into the news recap. Right, so in market news this week, the first thing we have to mention is that we had the worst first half in the stock market in the S&P since 1970. S&P down literally 20.6% thanks to runaway inflation and now the Fed trying to chase the inflation down. On top of this, later on in the week, the Atlanta Fed GDP Now tracker officially fell into the negative territory and closed out at a negative 2.1. This isn't the official GDP measurement yet, but it gives us a pretty clear sign that, quite frankly, we're probably going to see another quarter of negative GDP growth, sending the US economy officially into a recession. So moving into a little bit better news, the first thing is that we actually got our PCE inflation report, which is the one that the Fed actually prefers to use over the CPI report. The good news is that our year-over-year inflation rate looks to be declining when we look at the core number, and same with the month-over-month to some extent, where it's just been staying flat at 0.3 month-over-month for the last 3 months now. That's a lot of threes. Now, while we're on the topic of some better news, we did start to see treasury yields actually start coming down, and there could be a couple of reasons for this. The first reason is that because the stock market's been so painful, we might be seeing people jump ship from stocks and move into bonds, which can cause bonds to rally, which means that bond yields go down. I know it's kind of weird, but that's just how it works. On top of this, we have been seeing our 5-year break even come down, meaning that our inflation expectations have been moving down, which could cause some type of a rally in the bond market, as the bond market actually tends to kind of move first on these types of things. And also, it is actually a good thing for real estate, as it's going to make mortgage rates comes down, so we might see a little bit of an uptick in mortgage applications here towards the beginning of July at least. prices. And while we're on the topic of real estate, we might as well talk about some of the bad that's happening there as well. Cities like my own are starting to see more and more inventory hit the market, with listings skyrocketing while pending sales are actually starting to slump. And of course, you guessed it, that's leading to a buildup of inventory. And even in some cities, price reductions. Yes, ladies and gentlemen, that's right. We're starting to see real estate prices actually fall in certain states. And last but not least, Bitcoin has continued to be stumbling around this 20K mark while crypto firm chaos continues. Alright, so now with that news recap out of the way, let's move into upcoming catalysts. Alright, ladies and gentlemen, so very first thing moving into the week of July 4th is, well, happy 4th of July. But then on top of that, we do have some really important market catalysts actually coming up this week. First being the JOLTS jobs opening report for May. Now right now the forecast is set at 11 million job openings, so obviously if that report comes in under 11 million, that's not such a good thing for Mr. Market, and if it comes in over 11 million, that's actually a pretty good thing for the market. The previous JOLTS reports came in at 11.4, so where the forecast is, we are expecting to see that JOLTS number come down just a teeny bit in May. Now the same day that we get that JOLTS report, which is Wednesday, July 6th, we're also going to be getting the FOMC meeting minutes. Now this is something that's actually super important to be going through, as it gives us a better, more clear understanding of what the Fed is actually seeing over on their end, whether it regards inflation peaking or if they're going to be doing something with monetary policy, with their tightening or whatever. And for me, since this is going to be the report that was attached to their 0.75 basis point decision, I think there might be some interesting information in there regarding why they decided to step it up to that 0.75. And who knows, there might even be some recession talk in the minutes this time. Now moving on to the week after that, the week of July 11th, there isn't anything super pressing happening in the first couple of days that week, but on Wednesday, July 13th, make sure you mark your calendars because we got a CPI report coming. So right now the CPI report is expected to have a month-over-month rate of 0.5, and we have a forecast for the year-over-year number to be an 8.3. And just to give you an idea, the last report before that, we had a year-over-year number of 8.6. So they're, at least on investing.com, they're seeing a little bit of a consensus come down from the peak that we might have seen last month. But personally, I'm not trying to get too optimistic for this consensus number because quite frankly, the consensus has been wrong before, and truthfully, we want to start to see a couple of months of month-over-month declines and year-over-year declines before we can really say, yeah, inflation's on its way down. And trust me, the market would be doing much better, possibly even roaring, if we already had that. And obviously, we don't have that yet. In fact, last CPI report, if anyone doesn't remember it, it was quite a shocker to the upside, and it is kind of what we believe led the Fed to make that 0.75 basis point hike last month. Alright, well that basically sums up our very first week of investing $10,000. We got our brokerage account set up, we got our recurring trades, we made some trades, we did the news recap, we went through upcoming catalysts. We've been through a lot together already, guys. If there's anything that you didn't like about this video today, let me know down below in the comment section. If you wanted to see me remix it or, mix the segments up a little bit, if there's some segments that you don't even like at all, let me know down below in the comments so I can adjust these videos going forward, as this is going to be a series that I'm going to be doing every single week here on my channel for you guys. So let me know down in those comments below what you did and didn't like. And if you're not already subscribed and you want to make sure that you're here for every single weekly episode of this series, make sure you hit that subscribe button down below as well as the like button, as it does help me out tremendously. With all that being said, guys, until next time, peace.